Now with Peter McGuire, CEO of XM, who joins me here at the desk this afternoon. Peter, pleasure to have you on.
Lovely to see you,
Thanks for joining
Leanne.
us.
Thank you.
All right, let's start. We'll talk about the RBA and the Aussie dollar in just a minute.
Sure.
In the nearer term, though, this evening, we are looking to some inflation numbers that are coming out from the US Fed. Of course, we've heard from Jerome Powell recently, and he's talking about inflation not quite meeting the central bank's target as yet. What do you think with tonight's inflation read? Is that likely to support those recent comments from J. Powell?
I think so, very much so. And, you know, that overall global slowdown, and that's an issue for the Fed and the inflation numbers. And I mean, when you're looking back a couple of months ago, they were fairly flat. They no doubt they'll pick up a little bit in the, you know, the latest read. But the condition there is, you know, pricing and behaviour, and then you're looking at where, you know, you've had a strong rebound as far as equity markets in the last quarter. It's been extraordinary, and yet the inflation numbers, you know, fairly subdued, you know, as far as, and you saw those housing numbers coming from the Case-Shiller. I think it was 10 straight months of, you know, negatives. So it's a little bit of a problem, and I think overall you're going to have to worry about, you know, what forecast and what the growth is over the next quarter, and are we going to see some sort of Fed rate cut, you know, in the next 3 to 6 months.
Is the data looking bad enough for the Fed to actually cut rates? I know that there's been obviously a lot of talk about heading into a recession. That seems to be what the bond market perhaps is alluding to.
I don't know whether we're going to see a recession.
Is it bad enough though?
I don't think so. I mean, you know, I don't think it's going to be a recession. You've got unemployment at record lows. I think it's, you know, it's 18 or 20-year lows. And if you really stretch your mind back as far as the participation rate, we've got so many more people in the United States than what we had in 1970 as far as population numbers. So, you know, gainfully employed. The next part of it, of course, is you've got a very, very strong stock market that's just been extraordinary over the last best part of probably 7 or 8 years. Growth to the upside. Interest rates are incredibly low. Inversion of the, you know, the yield curve. People are saying possibly the rates are too high at the moment, so you might see some sort of bias there to the downside, and that's why, you know, the next 3 to 6 months. So I'm not suggesting you're going to see recession. There's plenty of, I think, good news out there for the US economy for the matter of, you know, possibly a couple of years ahead. I
mean, you look at the labour market, it's looking very strong. Yes, there's other factors that perhaps are showing signs of slowing down, but wages growth is rising, annual, you know, fastest pace in decades.
Exactly.
Unemployment rate, I think, says, what is it, an 18-year low that we're watching right now. So does that kind of back up the view that maybe it is the right stance for the Fed just to be patient here and not to move on interest rates?
Well, I think so. I think that's the case, and naturally you've got, you know, I think a little bit of pressure from President Trump, naturally to Jerome Powell, and he'll be pushing forward. He's looking, 2020 is a big year for him. He has to get, the first part of it is he has to get over the line with Mnuchin and Lighthizer of what's happening in Beijing over the next 24 hours. So he needs some good news stories coming out of that. Larry Kudlow's just come out and said, the economic advisor to the White House, and saying, look, we may see the reduction in some of those tariffs, and this could take weeks or months to actually get to some sort of end game. So it's a work in progress, as we understand, globally. The other side, as far as the Brexit issues and what's happening there, and that's, again, a work in progress. And Theresa May saying, look, she'll fall on a sword if it's, she just wants something to be done for the betterment of the UK. So I think overall it's just going to be more volatility over the next 3 to 4 months. I don't think that storyline's going away, and maybe we've come out of the blocks too quick for this first 8 to 9 weeks of from January 1 to really, you know, mid-March has been extraordinary. It
has, hasn't it? 10% gains or so we've seen for equity markets. It's been huge, but I mean, bond markets, credit, everything's been doing well. So yeah, high bar, I think that's been set for the
US dollar. I mean, you know, that at 97.20. I mean, that's been relatively range bound, but still, that's showing even, I think, further upside. You know, we haven't seen a sell-off there, and if even, you know, with those inflation numbers and, you know, concern as far as, you know, what's going wrong globally, you know, that US dollar index is still at 97.20. It's been, you know, 96 to 98, and I think it'll probably oscillate between that sort of range. So I'm not too negative as far as currencies. I think there's plenty of movement there to probably support from a trader's perspective.
In the last 24 hours, you mentioned the trade talks. There seems to be some positive progress that's being made in those trade talks. US officials, I think, were coming out sort of talking about talks on a range of issues, including that forced technology transfer. Just one of the issues, obviously.
Of course.
What do you think about this? Because obviously, if we see positive remarks, that might revive this risk appetite again for equities and, you know, other assets. But what do you think about this deal coming together soon?
Well, I think it's going to take it'll take a matter of weeks before you get something, if not months. And this is what Larry Kudlow is saying. So as far as President Trump, he needs to get it over in the line sometime in 19. There's no doubting that, because he needs a clear path for 2020 as far as re-election. That's his whole agenda. So he doesn't need a turn down of the economy. I think once you get some form of green light, it's going to be a stimulus to the US economy again. So that's going to underpin growth. And that's why I don't see recessionary fears. If the Fed's got rates too high with inversion of yield curves, then possibly you just need to, knock them back a little bit. We're in a low interest rate environment. If you look at the likes of Japan, you look at what's happening in Germany and Europe. So, maybe the States came out a little bit hard, and maybe it's time to just ease it back a fraction.
Speaking of a low interest rate environment, it seems to be all central banks around the world that are taking this dovish turn. The RBNZ this week. Yep. We are looking ahead to the RBA decision on Tuesday. What do you think we'll hear from them?
I think they've got to be well. It's again, you've got an election coming up in less than around about 6 or 8 weeks.
Yes.
So I think that they're going to. I don't think they're going to show their hand and say, well, look, they realise the numbers, their understanding as far as housing. I think it'll be just a wait and see, and it'll be a closer indication of what comes out in May. I'm not suggesting in any of the minutes it's going to be, we're talking about rate cuts just yet. Though I wouldn't be surprised if that materialises sometime by August or September. But I think at the present it'll just be status quo. Let's wait and see. No one knows, but I think it'll just be very much a work in progress.
There's been a lot of talk about them also waiting for the budget just to see if there's some fiscal measures to sort of help them out.
Absolutely, and if you see a change of government. So I think at the present, I think any Reserve Bank governor would be just, playing it close to their chest.
What do you make of the Aussie dollar down here? I mean, the RBA would be welcoming moves towards 70 cents and even lower.
Yeah, well, the other side is if you see these trade talks get a green light, that's going to underpin, and I think that's going to support the Aussie dollar. Now, where we're sitting at the moment, it'll probably again oscillate. It's been a pretty wild year when you're looking at it on a chart perspective. It's had very, very large volatility swings, and that will probably be further to the negative than the positive, but it just comes down to what happens as far as these China talks. So that's the only thing I think that's going to push it higher, but at the present I think it's a little bit range bound. Can
you tell us how the Aussie has actually moved this week? Because a lot of it has been because of the Kiwi, and what we did hear from the RBNZ, it spiralled down after we did hear that sort of dovish turn from them. So talk us through some of the moves that we watched.
Well, when you see that, I mean, you're looking at...
Well, that's the intraday chart for today, so it doesn't quite show the picture for the week.
Pardon me, I should take my glasses off.
But over the course of the week, I mean, there's been a bit of volatility, hasn't there, in both of those currencies?
Exactly right. And that's what traders are after. And you've just seen those big, relatively good swings, and you've seen that little bit of upside push, and then you saw a downside. So again, it's a day-by-day proposition, and those sort of global themes come out because of the macro views. What's going on as far as the minutiae, where does US dollar trade, and I think you've just seen probably a little bit of profit taking also. So it's a little bit of, just movement, and that's not uncommon in these markets.
Any other interesting currency pairs that you've been keeping a close eye on? That's putting you on the spot, I know.
I think very much so as far as UK pound.
Yes.
In the last year, we've seen 124 to 144 as far as range. It's currently at 130. I think possibly dependent upon what happens as far as Brexit, but that's the real wild card, and I think that shows plenty of opportunity and volatility. Keep their powder dry as far as trading perspective. That could be a very interesting trade over the next matter of days or weeks if something falls, and if something does, I think you're going to be, if you're on the right side of the trade, it could be a 4 or 5% move at least. Yeah.
Well, we know that MPs are voting on the next Monday, yes, but tomorrow as well, aren't they? They're voting on that. It's the divorce part of Brexit and not the future framework, isn't it? So it's this sort of stripped down version of the Brexit deal that Theresa May's put forward. So there's a couple of votes to come, actually. It's going to be a pretty crucial
I noticed
few days
that
ahead.
customs one. I mean, I think that was Thursday morning, and I was up in Singapore, and the customs vote was nearly got over the line on that one. Didn't miss out by much. I think it was about 8 or 10 votes. So that was the closest one out of those 8. So again, it's just a work in progress, and it seems to be very much an hour-by-hour proposition.
All right. I'm sure we'll see more developments in the coming days. Look, Peter, it's been a pleasure. Appreciate your analysis with us this afternoon. Thank you.
Thank you, Leanne.
It was Peter McGuire from XM joining us.